So if you're self-employed and a lender told you that you don't qualify for a mortgage, they're either lazy, uninformed, or they're working at the wrong place. Because honestly, right now with elevated home prices and self-employment being at an all-time high, because the buyers getting into homes right now aren't just the ones with W-2s, they're the ones that know exactly which loan programs to ask about. So in this video, I'm going to walk you through some home loans that almost nobody's talking about. The ones built specifically for self-employed borrowers, investors, and buyers who don't check all the traditional boxes. And be sure to stick around because the one that I'm covering at the end is the one self-employed borrowers should have been asking about years ago, and their loan officer just never mentioned it. So I actually sat down with a couple not too long ago. Both were self-employed, both doing really well in their businesses. And combined, both were bringing in well over 6 figures a year. The kind of income where you would think that on paper, we shouldn't have any problems whatsoever being able to purchase our own home. But for some reason, when they went to their bank, they were quickly denied. And like a lot of business owners, they wrote off a lot of deductions to save what they were paying on their taxes, which is exactly what most people do. But for a traditional lender who's looking at their tax returns, they just didn't show enough income to qualify for a home. And some of this can sound kind of ironic because you felt like you ran your business the right way, you worked with a great accountant, you did everything correct, but for some reason, the bank is penalizing you for it. But that's the overall system right now. But here's the thing, this honestly isn't a rare situation at all. The traditional mortgage was built for a very specific buyer in mind. One employer, one pay stub, and 2 years worth of clean tax returns. That's it, that's the box. But of course, the workforce and overall public doesn't really look like that anymore. You've got a lot of contractors and gig workers, business owners, real estate investors, retirees who are now living off assets, and the traditional mortgage system just doesn't always work anymore. And that couple I mentioned earlier, we ended up getting them closed in 30 days using a bank statement program. No tax returns required, just 12 months of deposits showing consistent income. And that's really where this conversation starts. So let me walk you through a couple different loans that actually exist for people in this situation, because a lot of loan officers aren't going to bring these up on their own. And if you're in this situation right now, you're self-employed, maybe you've been told no, and you're not sure where to turn, we'd love to have a conversation. So just reach out to us or drop us a message. No pressure at all, just options and honest conversation. So I'm Gary with Homes Ever After, and we help buyers and sellers all across the upstate of South Carolina and Western North Carolina. On this channel, we cover a lot of real things, loan programs, new constructions, first-time home buyers, and relocation tips and advice. And a lot of things that most people don't find out until it's a little bit too late. So there's no fluff, just real talk, and hopefully some value sprinkled in. So let's dive in and discuss some different loans that you need to know about and who each one is tailored for. So number one is going to be bank statement loans. So this would be ideal for the self-employed, where your tax returns don't really show what you truly make per year. Instead of tax returns, our lender can use anywhere from 12 to 24 months worth of bank statements to calculate your income. No write-off penalties, just real deposits. And of course, this is the one that helped that couple that I told you about earlier. It's one of the most underused options out there, which is honestly wild to me because it's incredibly straightforward and it works. Number two are 1099 only loans. If you're a contractor or a commission-based professional, or maybe even a gig worker, we're getting people qualified off their 1099s only. There's a whole lot less paperwork and it's way more accurate to what you actually earn every year. Number three are DSCR loans. This is one really for real estate investors, and honestly, it's a game changer. With a DSCR loan, we don't look at your personal income at all. We can qualify the property based off of its rental cash flow. And here's the part that really matters. You can close in an LLC, which is going to be huge for asset protection. So if you've been waiting for your personal income to look better on paper before you start building your rental portfolio, you may be waiting for something that you don't actually need. Number four are asset utilization loans. If you've got strong assets but limited income on paper, this could be an ideal fit. This one could be for retirees, high net worth buyers, or anyone who's sitting on solid investment accounts. They basically take your income and divide it over 60 months to create qualifying income with no jobs required. Number five are ITIN loans. So if you don't have a social security number, but you have an ITIN, you can still buy a home, believe it or not. So don't let anyone tell you otherwise. Number 6, we're talking about fresh start loans. So for people who might have experienced a bankruptcy, maybe even a foreclosure or short sale in your recent past, most traditional lenders are going to make you wait for at least 7 years before you can do anything. Fresh start programs can get you back into your home a whole lot sooner than that. So if someone's told you that you just need to wait it out, it might be a good idea to have a conversation with someone else to truly see what your options are, because that timeline may not be as long as you may think. Number 7 on the list is bridge loans. This is ideal for people who's found the perfect home that they absolutely love, but you don't have yours on the market yet. A bridge loan will allow you to buy now and yet sell your home later. So you're not losing out on the house that you truly want, and it gives you time to get the one you're currently in all squared away without having to rush things. Number 8 on the list is a non-warrantable condo loan. So here's the one that I mentioned at the top. And this is the one that honestly surprises a lot of people. If you've ever tried to buy a condo and been told that the building just doesn't qualify, this may be the loan that you need. Most loan offers will just tell you to walk away from the deal. There's nothing that can be done. And so what do most buyers do? They walk. But there's a lot of these that are being closed every single month. So again, if you have questions, it's worth having that conversation about. And honestly, that's kind of the theme of this whole video. So a lot of no's in this industry are really, I just don't know, or maybe it's a product I just don't have. But there's a huge difference. You have to make sure that you're not just applying with a loan officer who has all the traditional things, but nothing that's more of a tailored outside of the box program, because a lot of specialty loans do exist for people just like yourself. And for the lenders and banks who don't have these options, it doesn't mean they're bad or there's anything wrong with their company. They just don't have all the right tools in their toolbox. So if your situation is non-traditional, you need a lender who specializes in non-traditional loan types. Otherwise, you're probably going to continue to hear no over and over again, when the answer should have been yes or could have been yes the entire time. And if you want to know which one of these programs may actually apply to your situation best, that could be a short 10 to 15 minute conversation. So seriously, just reach out. We'll point you in the right direction and get you connected to the right people. And of course, there's no pressure. We just want to see if there's any options out there that maybe someone else hasn't uncovered for you. So the key takeaway is this: if you've been told you don't qualify, there's a good chance that you actually may. You were just talking to the wrong person about the wrong loan, because honestly, the buyers who are winning right now aren't the ones with the cleanest tax returns. They're the ones with the right loan officer who has the right programs. So if you're self-employed, maybe you're an investor, or you've been told no, drop a comment down below and tell me a little bit more about your situation. I read every single one of these and I'll definitely point you in the right direction. And if you're buying in Greenville, Spartanburg, or anywhere across the upstate, reach out to us at Homes Ever After. That's exactly the kind of conversation that we love having.